Hello everyone, hope you are keeping safe. My colleague Mahesh and I, Wael Makarem, would like to thank you for joining our weekly educational webinar. Today's topic is very interesting. We chose to talk about price bands, which are considered among the top tools used by traders. So we'll start first with explaining what are price bands and then move forward to identify different types of price bands. And by doing so, also we will be explaining the uses and demonstrate how to apply them on the Metatrader 4 platform. So first, basically, what are price bands? They are technical analysis tools defined by a set of lines plotted away from a moving average. They usually provide the trade with a relative definition of high and low prices. When the price is usually close to the upper band, it is considered the high relative to the past movement, and vice versa. So when the price is closer to the lower band, it is usually considered as low relatively to the past price movement. Also, price bands are helpful in comparing price action to the outcome of certain technical indicators. So there are some indicators that we use in order to have some insight on what could be happening in the market. So since the certain bands they rely heavily on the price and the price action, so they can allow us to compare the price action to the outcome of certain technical indicators. So why do traders use price bands? Usually they use them to know more about a trend, about volatility, breakout, and the overbought and oversold status of a certain instrument. There are several types of bands, such as the well-known Bollinger Band, Keltner channel, moving average envelope, and the Donchian channel. So let's start first with the Bollinger Band. The Bollinger Band is an indicator that was created by John Bollinger back in 1980, so it's almost 40 years old. He believed that volatility was dynamic and not static, so he created this indicator by using a moving average and the standard deviation to draw the upper and lower bands. So the standard deviation in mathematics, the standard deviation is a measure of the amount of variation or dispersion of a set of value. A low standard deviation indicates that the values tend to be closer to the mean of the set. This means when the bands are closer to each other, this means that the recent activity or the recent price move is close relative to the mean set, while the high standard deviation indicates that the values are spread out over a wider range. So when the bands diverge from each other, this means that the current price action is moving away from the previous mean of the set, meaning that we are heading for a trend. So the Bollinger Band is formed from a moving average and an upper and lower band. Traders will look for breakouts when bands move closer to each other or when they converge to each other. I'm going to show you an example. Since this is the meaning that the volatility is lower and it should bounce back, creating a trading entry for a trader. So here in this picture, we can see on these arrows where we plotted one, the Bollinger Bands first, this is the indicator as is. So here in the middle, this is the 20 simple moving average, and you are using a standard deviation too. In order to form this Bollinger Band indicator, you just need to select your moving average period and select the deviation. You can set a deviation 1, you can set deviation 2, you can go for deviation 3, which would be more far. So it depends on why you are using this indicator. If you are looking for a breakout, usually you want closer bands, so you can use a shorter deviation, but also this means that it can lead to higher entries, to more entries, and raise the defects, the probability of defects. On the other hand, or on the contrary, if we go for a higher deviation, it means that we are setting a standard that is away from the current market rally. So if the market usually reaches this price, it means that it is exhausted and we are entering oversold or overbought levels. So this could signal for a reversal. So for example, here we are pointing for these conversions uh, in the bands. So the bands are moving closer to each other. So investors here will start looking for a breakout. Also here they moved closer to each other. The price rebounded from here. So investors will start to look here. The price also the bands were closer to each other, and the market then rallied higher. Here when the bands were so much diverged from each other, we witnessed a reversal in the trend, and the market went from the upper band towards the lower band. With these circles, also they are showing how the price is trading on these bands. So sometimes they could be used as support and resistance. Here the band acted as a support, and we saw a reversal, and here the band acted as a resistance, and also we saw a move lower, and here as a support. Also the market bounced up, and then here we had a trend. So the closing in bands signal that the market is gonna move, it's gonna go for a breakout, and we went for higher highs. Though when the market was touching the upper band, we were seeing some small entries. So if somebody wants to scalp against the trend, which is usually not recommended, but if someone wants to scalp against the trend, they were able to get some pips when the market was trading above the band and then going back lower towards the 20 simple moving average. So we had trading sideways up between the 20 simple moving average, or the middle band, and the upper band. And here, when the market got exhausted, we saw a huge rally to the upside, and the market got overbought. We witnessed a reversal directly down, a sharp reversal down towards the lower band. So this is for the Bollinger Band. In brief, there are several indicators created from the Bollinger Band, such as the percentage B, where they use the input of the output of the Bollinger Band and made it like an RSI indicator. So if the market moves above 1, then if the price is trading above the band, then this means that the market could be oversold, overbought, and we should look for reversals. And the vice versa, if the market moves below the lower band, where the percentage B will show a reading below -1, this means that the market is oversold, and some traders will look for reversal towards or reversion towards the mean. Also, there is another indicator that was created. It is the bandwidth. So when the bandwidth is small or little, so when these bands are closer to each other, investors will look for breakouts, and when these bands are very far from each other, so this could mean that investors will look for a reversion back to the mean. So these are the benefits of using the Bollinger the Bollinger Band. So applying the Bollinger Band on your platform, you should set the inputs, meaning that you have to choose the period, the moving average, as we said, and the standard deviation. By default, they are 20 for the simple moving average and 2 for the deviation. This is the example. It is showing a 20 and 2. So before moving to Metatrader 4 platform and explaining and showing to you the indicator on the platform, there's also a new version of this Bollinger Band platform, the Bollinger Band indicator, which will show you the minimum deviation of the minimum values of standard deviation too. So it will be similar to the parabolic SAR indicator almost. So traders will look here for selling signals, and here for buying signals, selling signals, and then here they took all the rally to the upside. So they will wait for a crossing above the red line to buy and crossing below the blue line to sell. So this is another version of the Bollinger Band. It's not found on the MetaTrader 4 platform, but you can find it on the web and link it to your MetaTrader 4. So we're gonna move to Keltner channels, and then we're gonna explain both of them, the Bollinger Band and Keltner channel, on the MetaTrader 4 platform. So what is a Keltner channel? A Keltner channel is also used to signal possible price breakouts, to show trend, and give overbought and oversold reading. So it's similar to its uses are similar to the Bollinger Band. It consists of an exponential moving average. The Bollinger Band consists of a simple moving average. So this one is consists of an exponential moving average, which gives more weight to the latest price action. And the use of the ATR. The ATR is the average true range, which measures the market volatility by decomposing the entire chosen range for an asset price. So meaning that we take the high and the low for a certain, or the range for certain periods. For example, we choose a period 14 for the average true range. So we take all these ranges for these 14 candles, and then we divide them by 14, and we get the average true range. This average true range is added on the value of the exponential moving average in order to have the upper band, and is deducted from the lower band to have from the moving average to have a lower band. For example, if the average true range for the euro dollar for the past 14 hours is 15 pips, and the 200 EMA, or the 20 EMA, the 20 exponential moving average, is sitting currently at 1.08 in value of the euro. And I choose the multiplier 1. So I have here to determine 3 inputs, unlike the Bollinger Band. I have to choose the period of the moving average, the exponential moving average. I have to set also the input, the period of the average true range, and the multiplier. So if I choose a multiplier 1, it means that I'm adding the 15 pips to 1.08 to draw the upper line, and deducting 15 pips from 1.08 to draw the lower band. Usually traders looking for a breakout, they set the multiplier at 1, which would give us a relatively low difference between the upper and lower band, and buy any breakouts above the upper band and sell any breakouts below the lower band. While those looking for a reversal, they increase the multiplier and look for a reversal in price if the price reaches these bands. So these two examples here, we're going to explain. Here is a small demonstration of the Keltner channel. So this is the 20 exponential moving average, and here is the ATR added, deducted from the moving average to show the lower band, and here it is added above the moving average to show the upper band. So we have an upper band, a lower band, and a 20 exponential moving average. So if I'm a trader who's looking for a breakout, usually I will choose a multiplier 1. So when the price breaks above the upper band, I'll look for some scalps to have to bank some pips. And also if the market moves below the lower band, I'll be looking to selling some. So here I got some good entries a couple of times if I'm looking to scalp in the market. If I'm looking for reversals, mainly I can go for a bigger multiplier. So here I chose multiplier 3. So I'm adding 3 times the ATR. So if the ATR, for example, is 15, I'm adding 45 above the moving average and deducting 45 from the moving average. So the bands are wider. So when the bands are wider here, I got this reversal signal, I got another reversal signal, I got another reversal signal at the top, and here was a reversal signal. So here we have 4 out of 4 trading signals from the Keltner channel. So it's very simple. When I want to have to trade reversals or overbought and oversold levels, I go for a bigger multiplier, and when I want to trade breakouts, I go for a smaller multiplier, choosing 1 or 0.5, or it depends, meaning that I have to choose a smaller multiplier. So we'll go to the Metatrader 4 platform before moving to my colleague's side to talk about the moving average envelopes and the Donchian channel. So this is the Metatrader 4 platform. Uh, here's the dollar yen. So in order to add to add the Bollinger Bands to your platform, mainly you go for bands here under navigator, and then you drag it here and add it. So under inputs, we have the bands period, which is the period for the simple moving average, and we have the deviation, that's the one we chose, and you can also shift the bands forward. It depends how much bars you can set bars 5, 10, 20. So if you are going for if you want to shift the price band, so let's apply the normal price bands here, so we can make them thicker. So here it is a bit thicker. So here we can see as the market moved higher, or had a breakout to the upside, the bands were so far from each other, meaning that we are going for a reversal, and the market reversed here first time and second time. Also here when the bands were wider from each other, or were diverging from each other due to the move down, also we witnessed a reversal. When the bands are close to each other, you can see the difference between the upper band and the lower band was very, very small, 106.80 and 106.68. So we're talking about 12 pips. The market broke above the previous high and moved towards these highs at the top. So here when the market is closing in, this means that the past couple of periods had little movement in the market. The market had little movement in the past periods, meaning that traders are awaiting on the sidelines for any break. So here, when the market broke above the previous high, we witnessed a rally to the upside around 25 pips. So also here, the market was followed by a reversal, since we witnessed a divergence in the Bollinger Band. The bands, they diverged from each other due to the rally to the upside, and then here we witnessed a reversal, and then another reversal, and then when the market closed, when the bands they closed, they were closer to each other, here we witnessed another break lower, and then here also we witnessed another break lower. So when bands are closer to each other, traders will be looking for breakouts, and when bands are wide from each other, or the difference between the bands, or the width between the bands is very large, they will look for reversals in the market. So this is uh, for the Bollinger Band. Some traders do trade against the trend. So when they believe that what they see these bands closer to each other, they start selling here as the market is going oversold, overbought. But this is not the case, and the proper terms, because when bands are closer to each other, usually witness a breakout. So it's better not to be against the trend in such moves. If, for example, we had a bigger input, for example, we had three, maybe this is better, since the bands, they are a little bit far away from each other. So we're giving more space for the market to rally outside its norm, so we can look for some reversals in this pattern. So this is for the Bollinger Band. I'll go for the Keltner channel. Also, the Keltner channel, unfortunately, is not available as a built-in on the Metatrader 4 platform, but you can look for it on the web and then add it to your platform. So here for the Keltner channel, we have different inputs. We have the EMA period. So we're choosing, let's say, the 20 period for the exponential moving average. You choose the period for the ATR, the average true range of the last 10 pips, and then the multiplier. I'm going to show you different cases. So this is for the multiplier one. I'm going to just have a better color for the, I'm going to choose blue, red. So in the middle, it is in the middle we have the moving average, and the bands of the Keltner are above. So when we are choosing a smaller multiplier, we should look for breakouts above the upper band and lower bands. But if we go for a larger multiplier, so for example 3, we can look for reversal from these bands. So for example, this, we got a small reversal here, we got another reversal here, we got a reversal here, another reversal here, another reversal here. So the market was moving outside its norm. It was overextending from the normal level, from the 20 exponential moving average, and we were witnessing such reversals in the market. So this is for the Keltner channel. I'll leave you now with my colleague Sai in order to explain more about the moving average envelopes and the Donchian channel. So Sai?
Yeah, thanks, Wael. Hello, everyone. Hope you're doing good. This is Sai joining with you. It was a great explanation from Wael. Basically, it's about we are going forward for two more uh, type of tools, basically. So when you take the next one, it's like moving average envelopes. So from the name itself, you can understand that it's with moving average collaborated. So it is formed of moving average and two lines, one above and one below. Drawing by adding and deducting the specified percentage of the to the moving average. So to be very specified, this period of moving average and the percent, the two parameters are be set on this particular tool, which is the moving average parameters as well as the percentage of the parameters. So that gives the width of the moving average value as well as the direction of the trend. So it is used mainly to identify the overbought and oversold level. So basically, any moving average, taking the moving average envelopes, it's a similar to other technical indicators where we can say, for example, take with the Bollinger Bands and Keltner channels, which you have been while we're explaining. So it's talk about the width of the bands and the channels based on the volatility of the measurements. So this is how exactly it has been measured. So this tool, basically, it's very simple tool. It's very simple to understand. Only thing is that you need to keep a basic terms inside the parameters where you can see that I can show you from the slides. Sorry, some technical issue. So from the slides, we can see that, which is a very simple indicator. As I said, it's very simple. So the buy signal occurs when the price closes above the moving average, and the sell signal occurs when the price below the moving average. So you can see there are a major upper line and the lower lines. So this is a parameter we set, So this type of tools we can able to plot it any time durations, even shorter time durations where short traders or intraday traders also you can use it often, or maybe longer durations like daily or weekly as well as monthly. We can also plot this type of tools to identify the trends. So here you can see that there is a top and the bottom here. So the decision where we taken here is to be whenever the signals or the market trades above and close. For example, if you're taking for 30 minutes or a 1 hour time trade of charts, so whenever you see, when you plot about like this is, we have been kept two parameters. One is a 20 and we can say 0.5 deviations. The two things, as I said, there are two important parameters to be set. So depend on your time and depend on your time frame of state of trading. So we are set here, we shown in the screenshot on the slide, which is a 20 as well as like it's a 0.5. So these are the two above and the low one. So whenever there is a crossover or break even happened above this average, so you can be on a buy side. So if you see in this trend, we can keep on having big support is maintaining above this blue line, which is keep on going on the other directions. So when there is a breakout on the reversal side and their breakout happens, this is on a selling mode of mode. So in case of like basically this is like unfortunately there are some false signals appear on a consolidation markets, but still to avoid these things, obviously like you have to place a proper parameters to get into the a proper direction to avoid this small type of false signals into it. So basically you can minimize that limitation. You can limitize this type of false signals only by filtering into the type of technicals parameters. So what I suggest you, like in this case is mainly if you go to the next slide, we can see there is a parameter has been set here. So this is like, so mostly the moving average two things to identify: one, to breakout level, as well as to keep identify the highs and what is the lows of the markets. So this helps you in both the sense. So depending on the traders strategy, traders understanding, you can play on the markets depending on your type of strategy. So here if you see the wider the range, which I kept here is like 20 as well as 2% as a deviations, the wider the market goes. So we can see there are top and there you can see the bottoms here. So this helps you to take a decisions where we can go for as an overbought level, or we can say for an oversold level here, where you can be on a buy side as well as on the sell side. But same markets and same chart which has been explained in the previous slide, which is on the lower deviation, there you take a breakout as entry. Here you take your entry as per on the higher side as a lower side, to be on a correction market, as well as when the market comes down you be on a upper side markets. So this is exactly the filtration can be limited your false signals, which along with a moving average, which helps you with the envelopes. So let's move on to the next one. So which is the Donjon channels. It's basically it's indicator. It's indicator, one of the popular indicator used in the market trading developed by Richard Dawson. It's 1910 or something. It's a very old and very popular one. It is formed by taking the highest high and the lowest low of the last n periods. So basically, this is also a type of a tool where indicate the top high and the top low, which widening the range. Here also it mentioned about the parameters, how exactly you have to set the parameters. When you set the parameter, it has to mark the high as well as mark the low of the parameters. So in the sense, like if you say Dogen indicators, which is one of the commonly used platform on the chart, which is which basically gives the price stability. So for example, when a market sees to be volatile, so the range or the wider of the channel will be more wider. When their case of stable, when the market is consolidations, you can see relatively a narrow type of channels type of move in this. So here we can go to the next level of next slides. So there is, you can see a clear picture how exactly the adolescent channel has been plotted. So even this is also a same way where we can use it for breakout levels, or we can use it for higher resistance and lower resistance of the markets. It basically works very good in trendy markets, basically because the consolidations of the fast signals, it works. But to be very good performance, to be, sorry, no tools gives that 100% result for you, but to give a combination of this unit channel with other, it may be suited with RSI, maybe suited with other oscillators, will give you a good result on it. So in this case, like here, to be explaining in a pointer way, so where you can see there is a primary use, how exactly the long and short portion has been taken call in this market, in this tool. So there are different strategy or implemented and proven strategy in this particular tool. We can say one is a total trading strategy, one is a exit strategy. So it's very simple, we can say, like which is successfully like way of trading on a successful way, it's which been gives a proper result on a consistency way. So as I said, combination of any other indicator oscillator, like momentum indicator, or we can say RSI strength indicator, which also gives a lot of good result on this indicators. So here we can see there are the two upper and the lower type of averages are moving here. So we can also set based on this. So by default, normally you can see there is a set n factors available on the either side. So here we can see move on both both the side, where we can see only on direction based channels. So let me go on to the MT4, will be more easy to understand. Let me explain both the envelopes as well as the Dojin. Let me check. Let me plot the envelopes first. So here you can, from MT4, you can able to plot those envelopes. Here, as I said, there are different time period we can set here. By default, it's 14, and by deviation, you can see like a 1% here. To be like, if let's plot with the same default, and you can also have a method, like you can go with exponential, simple, or other type of moving average method. So let's plot it here. It's a very wider. So let me set for 0.10. So let me go for the lower directions, because the minutes here is 30 minutes. So let me plot with a 0.10 cents. So this is how exactly the envelopes works here. So here you can take any call on either directions of it. So for example, if you take here, there is a up close up and up above this lines, this moving average, mean to say this line. So you can buy above this level. Since it has got a failure, it's got couldn't able to break the level above this level, and the market has been corrected back down. So again, there is a sell call has happened here. So you can be on a seller side, but since it's 30 minutes, you can't be stay with a long time with the markets. Always you have to go for a shorter time and shorter profit levels. So I'm basically like keeping a stop. It's very important here, since there is a even a risk risky trader can able to make a wait for other level to come, but as a small traders or less risk traders, always be on the market with a small durations. If for example, if you're going for more than a 4-hour charts, you can see there's a big direction happening here. So this is a trendy, like 4 hours normally it takes 8 hours, or maybe it takes more than 24 hours to reach your profits as to give the trend. So this is a more useful tool envelope for mostly for moving average based kind of indicators. When you're coming to the next one, let me plot the Dogen channels. Let me move this. So here you can see the inputs. As I said, like you need to keep the value here. By default, it's 20 here. So by keeping it over, and I'm going to remove the envelope. So see here, it's very clear. So this gives you the high, the top high, the top low. So this depends on the traders wish, like they are going to be at correction markets, or they're going to be on buyer side markets. So there's a middle line crossover. So this is how exactly, even the many traders used to have this type of trading strategy. Whenever it crossed the middle, there are more chance to touch the higher level. So that keeps as a major resistance. So whenever there was a previous resistance, you can see there is a previous resistance in the market is touched and be the correction. And when again there is a chance to break again, they may take a chance on it. So this is how exactly this type of tools helps, which but basically it's not available directly from the MT4. Maybe you have to seek for outsource software to plot it on your MT4. So these two envelopes as well as this channels, both are very excellent and popular one. The only thing is that the parameters. So you have to choose your parameter whether you are a correction trader or you are a breakout trader. So if you're a breakout trader, always go for the lower parameters. When you're going for a higher period, I mean, you are a correction type of traders. For example, when the markets reach this top, so always being on a selling side. So they are correction markets. So this help you with combination of other type of indicators or oscillator like RSI, movement in channels, or we can say stochastics. So even that helps you with these combinations. So how exactly this is happening. So hope you enjoyed. Thank you.
Thank you, Sai, for this explanation. So please, if you have any questions, please write them down so we can answer you.
While there's a question, we can use for scalping.
Yeah, you can use it for scalping in 5 minutes, but you have to choose as Sai said, you have to choose the proper parameters. So for example, you have to go for lower parameters in order to look for breakouts on the 5 minutes, or you can go for a bigger parameters or bigger deviation, bigger multiplier for the Keltner channel, a bigger percentage for the envelope, or a bigger period for the Donchian channel, so you can go for reversal trading or for the reversion to the mean trading. Sorry, but your question is not clear. Can you rewrite it, please? You're talking about which indicator first, so we can explain it further. If you're talking about the Donchian channel, so you're talking about scalping between the middle and the upper band and the middle and the lower band. Also, it is usually done by traders. So, but it has a lot of entries. So usually when we have a system with many entries, the chances of defects would be higher. So you have to add a filter to it. You have to add another indicator in order to filter your entries. Okay, perfect. So this is it for today. I would like to thank you for joining, and hopefully we'll get in contact with other webinars. On Monday we have the weekly market update webinar, and on Wednesday we have another educational webinar. So that's it. Thank you. Sai, would you like to add anything?
So thank you so much.
Okay, thank you all for joining.